Everyone, and welcome to the November 2025 Little Nuggets of Tech and Telecom, hosted by yours truly and Jen Fritchie, who is going to be joining us. Just a little bit of technical difficulty for the moment. We are incredibly happy to feature our rather famous and well-known analyst,
Uh,
Roger Entner of Recon Analytics. Roger, I know you've been up to your eyeballs and very, very, very busy lately, but thank you very much for making the time to join us.
well, anytime for you, Carolyn.
I
Anytime.
really appreciate it. All right, so we have a lot to cover. So today's topic is looking out at 2026, kind of what are the things as an analyst and a market observer in the tech and telecom space for many decades, kind of what you're seeing. And we see, as promised, we are joined by Jen.
Hello.
Hey, Jen.
Sorry. Hi,
That's
Roger.
okay.
Hello.
It's it's that kind of day. It feels like a Monday, even though it's a Wednesday.
Every day is Monday.
All right, Jenna, we were just getting started. Maybe to kick it off, Roger, I'm curious, what is your general view on M&A activity coming up in 2026 across multiple sectors? Broadband, tech, telecom. I know you guys just put out a note today talking about some developments in the media and sort of what that looks like. So
Yeah.
I'm curious, kind of big picture, what are you seeing out there?
Well, when I look at M&A, what I'm seeing, especially on the wireline side, a repeat from like 15, 20 years ago, where we see a consolidation among the small providers. And small here is like we just saw Frontier being acquired, but it's basically a consolidation of the tier two and tier three players. And it's a repeat of what we saw 15, 20 years ago, where uh, value where we had a technology change combined with a consolidation in the market with external events and with generational changes. Uh, we see about 1,300 small rural ISP, or there are 1,300 ISPs still left in this country. It's a staggering amount. Um, as you know, and probably the people on the podcast know, is that we run this really large telco survey every week.
Hmm.
And we survey now 6,000 wireless customers, 6,000 home internet customers in English, and 1,500 each in Spanish. So that's 15,000 people every single week. And we
Okay.
have now about 2 million people surveyed over the last 3 years. And we have data on 1,100 of these small ISPs, right?
Okay.
And so you have the change coming where you are seeing, and for a lot of them, this is the second time that they're dipping in here because if you remember, we had the non-wireline, we had the wireline B licenses in wireless 850. Every one of those small rural telcos got a license. They
Hmm.
put it together, had their own wireless carriers. Some of them are still around, like Appalachian Cellular, for example. So
Hmm.
some of them are still around, but a lot of them sold out and made out like bandits. Like a billion, like one example I have with who I worked with in those days was Midwest Wireless.
Hmm.
They sold for $1 billion.
Could
And
not have been run by a nicer man, though.
yeah, Dennis Miller, good
Yep.
friend. Uh, and um, and so all the small rural telcos, about 28 of them, shared the $1 billion, and some of them invested in fiber, others bought a vacation home, whatever, right? Now this is the second time going to the same thing where, BEAD is coming. And so the step into fiber, and then you have still a massive availability of both PE and carrier funds, makes it ripe for consolidation.
So
And
you're
so one of,
actually you're actually seeing activity out there in the
oh,
marketplace
absolutely.
indicating that this is more than just, a casual observation by some researchers. You're actually seeing folks kind of assessing opportunities for
Oh,
themselves.
absolutely. And we see things happening. For example, take T-Mobile. T-Mobile did a joint venture with Lumos, a small rural guy uh, in Virginia, through EQT, their PE firm. Then they got MetroNet, and then
Hmm.
they got US Internet, which has a very ambitious name, but it's a small provider with like maybe 20,000 customers in suburban Minneapolis. So we see the carriers buying, we see the PE companies buying, and so I'm writing really detailed reports on the 500 largest privately held ISPs, and that means like the cutoff is around 10,000 customers. And so
Okay.
these are really, really in-depth reports that are helping these providers to make a decision. Do they want to turtle up and, wait for the storm to pass? Do they want to become a small rural consolidator, or do they want to buy and do they want to sell, right? And selling and being a rural consolidator is not mutually exclusive.
Right.
So
Right.
it's like tremendous amount of activity here underneath the surface that's not really, that only sometimes is making the headlines.
Right. Right.
Where really a tremendous amount of activity is happening. And then we still see spectrum transactions,
Hmm.
right?
Right.
Um, Charlie Ergen's AWS 3 paired is still around, and I would expect that all the carriers are looking at that.
Roger, can I ask you a quick question about Charlie? Do I recall correctly that maybe I might have been the only person, excuse me, but I thought perhaps you were skeptical a couple of years ago when we were looking at the headlines coming out of Washington, D.C., that somehow Charlie Ergen was going to be this nationwide fourth competitor to exert
Yeah. Yeah.
pressure on the large MNOs. And I remember thinking at the time, like, are these people, do they actually know Charlie Ergen and have they looked at his track record? But I think you were also somewhat skeptical.
I was very skeptical, right? I I give Charlie and his team a lot of kudos for
Mm.
building a terrific network, a technical marvel. But I had always doubts about the sales and marketing side. It is, and what they offered was really lacking differentiation.
Hmm.
And so you have a really hard time, um, getting people to understand why they should go with this provider.
Right. And
And
Jen, do you think the market really considered Charlie at any point a robust national competitor such that when, it was announced that he was selling, these spectrum assets, I think there were some headlines inside the Beltway like, oh no, the fall of the fourth national competitor. I, I didn't get the sense investors really looked at him that way.
I would agree with you, except you look at the tower stocks since that announcement, they've really fallen off that there won't be a fourth carrier. So they obviously believed it. The street believed it more
Right.
than I gave it credit for. But I was
Yeah.
going to ask Roger, like the nasty gram that came from Brendan Carr to Charlie over the summer, was that actually, I mean, I know that Ergen's saying he wishes he didn't want to sell the spectrum, but was that like a blessing in disguise? Because it was like,
it was a blessing in disguise, right? It put fire underneath Charlie's butt to get things going. Also, he was in violation of his own commitments, right? And so there's the Stockdale letter where they committed to building out in rural America. And then they're like, no, we're not going to do that. Uh, and, I always look at it like all of the regulators and especially all the senators who are overseeing the FCC, every senator is a rural senator, you know? And so they care about rural America. This is
Right.
not, while economically, I understand why you want to build out in urban markets because it's much more profitable and cheaper to do. In the end, both the FCC and especially their overseers are much more concerned about rural America. And when you renege on that deal that brings more competition to rural America, the deck, the cards are up and you're being called.
Right.
And, you know, I don't think uh, Charlie Ergen and Brendan Carr have a great personal relationship, and that, certainly didn't help either.
Right.
Um, so, and Charlie got like so many get out of jail cards from the
Hmm.
FCC, from both sides, Democrats and Republicans, that uh, at at one point in time your luck runs out.
Hmm.
And
Nobody ever thought it would for Charlie. And I would argue, Jen, to your
well, and in
point,
the
it's a
end, luck
blessing in
didn't run
disguise.
out. It just changed,
Right,
and Elon Musk made him very rich.
right,
And
right,
Elon was the only one who could buy that spectrum because he so poisoned the well in it with his lawsuit,
right.
right?
So we see in terms of the smaller guys, actual movement, maybe getting
Yeah.
together, maybe selling. We also we don't necessarily see, that actual M&A happening amongst the large guys, but we do see them very active in the secondary markets. So one of the things I wanted to ask you about is the new leadership changes. So we've got the Germans have made it very, very clear T-Mobile is their company, and
Yeah.
they're not standing behind an American CEO. You've got Verizon has a new man at the top of the pile. I guess the question is, what does all of that mean potentially? Like, for example, under T-Mobile's new leadership, how do you see them? Are they going to just continue executing against the plan? Do you see them changing kind of their marketing or anything like that? And same with Verizon.
Well, the whole leadership changes is setting up an epic battle because we also, let's not forget the cable guys, right?
Mhm.
They're also
Hmm.
a massive force in mobile, even though that they get uh, savaged by mobile on the broadband side. So there's like this interesting competition. But 2026 is set out to be an epic year, right? You have the leadership change at T-Mobile, right? I look at it. John Ledger built the foundation of this. Then Mike Sievert built the walls and everything. And Srini Gopalan, who has taken over, is his task to put the roof on top of it, which means then T-Mobile to be the number one wireless carrier in the United States. Because if the numbers don't change by the end of 2026, T-Mobile is the number one carrier in the United States.
And that's by subscriber count, I
By
assume.
subscriber count. They are already by valuation
Mhm.
far and away, right? So the market believes them without a doubt. So anything that stands in the way of that would be a massive disappointment, right?
Mhm.
You have then uh, you know Verizon that under Hans Vestberg, you know, uh, Dan very kindly called it that they were the hunting ground. I called it the feeding trough of the industry, right? If somebody wanted to have subscribers, they went to they went to they went to Verizon. The board the board saw the third quarter results and 3 days later, they fired Hans and
But
put in.
Roger, can I interrupt there?
Yeah,
Were they that bad to cause that? Or is it like, does it go back to the C-band auction that we'd spent whatever it was, $23 billion, and now we're the feeding
yeah.
trough, as you said.
Well, it's not that it was that the situation was not serious, but it was hopeless
Hmm.
because Verizon under Hans, and the board is partially complicit in this, decided that the leadership and the company's objective are service revenue growth, wireless service revenue growth, EBITDA margin, and free cash flow. The
Hmm.
easiest way to grow this is uh, by not growing too quickly, right? Or
Mhm.
not growing at all, because a new subscriber is at least for a year cash flow negative. And
Hmm.
so if you want to make your numbers under that scenario, if you make your numbers, the logical choice is not to be too aggressive with customer acquisition, raising money on the base, and finding other revenue sources. So for example, and they did all of that, right? And so human beings are executing against the incentives that are given. And when the incentive isn't subscriber additions, that falls off the table. And so, for example, Verizon has included their perks revenues in service revenue. No other carrier does it, right?
Yeah.
And so that certainly boosted, and 15% of their service revenue now comes from these perk revenues where they're basically reselling somebody else's products with a margin. Let's give them at least that credit, right? But it's not the core business. And so what happened then is your subscriber, you raise prices on your base, which means and on your headline, which means fewer companies are joining, more customers are leaving, which means revenue goes down, which forces you to increase rates again on your customers, which means your churn goes up, your numbers are going down, and you have this vicious circle going round and round. And so with this strategy, you're dying a slow death because at one point I said like you and I said that for years that with this strategy you can only wring blood out of a stone for so long, right?
Hmm.
There's nothing left. And so I think that the numbers continue to go down. Typically, when I'm following Verizon for 25 years. First time under Lowell McAdam, they started losing customers in the first quarter. Then they started losing customers in the first and second. This time around, they basically are losing customers first, second, and third quarter, right? They only were making like last year, fourth quarter, made a subscriber positive year by spending money left and right. In order to maintain customers, they have to add like 450,000 subscribers in the fourth quarter.
Yeah.
Uh,
Let
very,
me just
very difficult for a company that hasn't done that.
let me jump in here and ask actually to that point on the subscribers and where they would find them. Can we talk a little bit about the competition that we've seen kind of explode in the public safety market,
Sure.
right? So AT&T first, to participate in that space in terms of responding to the RFP that the government put out,
Well,
winning the
Verizon
bid.
before, let's start even a little bit further back.
You want to go back to Motorola?
Verizon, Verizon used to own public safety.
Right.
They had like 95% of public safety.
Thanks to all those lovely bricks made by Motorola.
Yeah, but on a great network, and of the agencies that had that, they they had like almost all.
Mhm.
And in a bout of hubris, they did not participate in the FirstNet auction.
Right,
Neither did T-Mobile,
correct.
but I think T-Mobile at that time was organizationally not ready for this, right? Only Rivada participated and of course didn't win it. So in with a lot of attention, foresight, and then great execution, AT&T won the FirstNet contract
Mhm.
and started both attracting a lot of the agencies that previously did not have a contract but made their first responders um, expense it, which is a travesty because if you have to use your private device and there is an incident and there's a lawsuit, then your private device gets subpoenaed. Uh, right? Mobile devices are now work tools and they should be provided by your employer. And AT&T has done that extremely well and has also eaten dramatically into Verizon's previously and what they probably thought impregnable hold on first responders. And so, you know, and now everybody's like, holy cow, AT&T is doing such a great job. What did we do? Right? Verizon is stepping up the game. T-Mobile stepped up the game and provided and uses first responders as a proof case for their network slicing for the 5G standalone core, and has made some banner wins like the city of New York and several other large metropolitan area. I think Miami, Chicago, something in LA. So I think they've made like headlines. I'm not sure how much they have done on the bottom lines,
Right,
right?
right.
Mhm.
But at least from a true to form T-Mobile perspective, it has been from a PR perspective a massive, massive success.
Yeah.
And it also then allows them to say, hey, if this is good enough when lives are on the line, it should be good enough for your production line,
Right.
right? And
So at
so
the
they
end of
do
the day,
that.
you're seeing all of these companies are providing a solution for the benefit of public safety. So that whole situation, from my perspective, seems to be a very, very positive outcome with all of this additional competition introduced in the provision of services and solutions for public safety.
Absolutely.
But the reason I brought this up now, as a
Yeah.
follow-on to your point on the subscriber count that Verizon needs to rectify, is it would seem that they are doubling down on trying to go after the kinds of public safety entities that people like FirstNet are supporting, right?
Well, yeah, when you lose half of your first responders, if
Right.
not more, you
Yeah.
know, somebody's putting a fire underneath your seat and say like, go move,
Right.
right?
Roger, Carolyn, can I ask a bigger
Yeah.
question on
Yeah.
Verizon? It's being called like Dan's plan, and they want to get customers back. They want to get coverage back, but yet they're cutting CapEx. They have no low band spectrum strategy to speak of. In fact, I think AT&T's 600 move was brilliant. And they're not talking about changing price. So how are they going to, separate from FirstNet or excuse me, public safety, how are they going to get customers back?
Well, that's the big question, right? Um, so I don't think low band is that critical. Low band gives
Okay.
you coverage, but it
Mm-hmm.
doesn't give you capacity.
Okay.
uh, by necessity,
Yeah.
right? You can't do MIMO in low band because MIMO is dependent on your wavelength,
Mm-hmm.
and the lower the frequency, the larger the wavelength is, and therefore the larger the antenna becomes,
Okay.
right? The the antenna is a quarter of the wavelength. And when you go into 600, the wavelength is like a foot or two. And so you
Mhm.
can't do MIMO. So it's not a capacity, it's a coverage issue. I don't think Verizon has a coverage problem. It has, if at all, it has a capacity problem. And
Mhm.
so higher frequency is here a lot more important, and I would expect them, the FCC just announced that they are planning to sell the upper C-band. That would be much, much more interesting in that case.
So just,
So,
just to push there a little bit, I mean, they
yeah,
bought so much C-band spectrum. They spent by far the most. They have 200 megahertz in some
uh-huh,
market. You still think they need more?
yeah,
No? Okay.
absolutely. If you want
Six
to,
my ears, but
if
yeah, that's
well, if you want to do FWA
mm-hmm.
at scale, then absolutely yes. For consumer, for mobile handsets, right? We're right now at like 16, 18 gigabytes per month on a mobile handset. We're on 600 gigabytes for FWA. What fills up wireless networks today is, or what fills up the fallow spectrum is FWA.
Yeah.
And I alluded to it. The cable companies are very successful in selling mobile service to their customers that love them, right?
Mm-hmm.
So
We
actually,
always talk about, go ahead.
no, I was going to say, if you can unravel that, you and I
Okay.
have talked about this a couple times, which is
Yeah,
I still don't understand the cable strategy, right? So they've been staunch opponents to the commercial networks getting access to more spectrum.
yeah,
And yet their
of
entire
course.
mobile strategy is reselling service off of those MNO networks. So
Okay.
how does trying to constrain the capacity of an AT&T make sense for a Comcast if Comcast is reselling that same service? It's just, I can't get my head around
Well,
it.
you make, on a marginal basis, you make 60, 70, $80 on your broadband connection. And on the mobile side, you make maybe $10, $15. Also, 90% plus of your traffic you're trying to put on your own Wi-Fi. So by all means, constrain the spectrum. Uh, Also, they're building out their own CBRS networks. One of the things you have to remember that 30% of traffic occurs in 1% of the footprint. And
Mm-hmm.
so if they're building out their own network with CBRS in that 1% urban geography where most of the plurality of traffic actually happens, that's all fine, right? Because they protected their own and they're using the wireless spectrum and capacity in rural and ruralish, right? The cutover between suburban and rural, they're using the wireless networks where we have surplus capacity anyway. Um, so from that perspective, it's perfectly rational. Um, what we see also, they're the headlines that, cable company X is like the most hated company in the country. Uh, yes and no. When you actually look at customer, when you stratus, like we, for example, have the largest NPS program in the country, larger than Bain, at least in telecom. And 1/3 of cable customers love them. And they do a fantastic job for that 1/3. 1/3 don't care either way. And 1/3, yes, hates them, right? And uh, for fiber, right, more people love them, fewer people hate them. And so what happens here is that third of cable customers, I always say, like, bundling doesn't make people happier, but happy people bundle, right? And so the people who love their cable provider are bundling mobile with it. And that's how they rack up the number. At the
Got
same
it.
time, 1/3 of their customers absolutely hate them, and if they have an opportunity to get out, they run for the exit.
Hmm.
That's why their numbers are going down. What's also very interesting is everything they build new is fiber, not
Right.
HFC, not traditional cable.
Right.
Um, and so we see that trend. And by the way, in our surveys, we always ask, who's your current provider? How long are you with them? Who's your previous provider? If you would have to choose another provider, who would you choose? And when are you planning to leave? Almost half of our respondents who don't have, almost half of the people say, my next provider is an FWA provider. Almost half.
Mm.
That means FWA growth is is supply constraint, meaning spectrum constraint, not demand constraint.
And I
And
think
so,
your colleague just put out a note, was it yesterday? Or maybe it was today in one of the trade publications, really talking about the dynamics with Disney. But
yes,
I was struck by, again, the updated discussion on the impact of fixed wireless access is
correct,
having on the competition dynamics.
exactly, because um, it's the opportunity here for the wireless providers is to push FWA left and right,
Right.
Mm.
and you know, uh, they can sell basically as much capacity as they have. They can open this up and sell.
Right.
Uh, so this will be a gift that keeps on giving. And by the way, we're talking about Comcast, right? Comcast in this earnings call said like, we've heard it. They had a leadership change, and I always say, numbers and facts don't make decisions. People make decisions. And the new leadership team at Comcast came in and said, like, this is unsustainable. We can't continue to die the slow death similar to Verizon, right? That said, like, raising rates on fewer and fewer customers. Wall Street hated them for it.
Mm-hmm.
Because Wall Street prefers a slowly dying provider to one that's fighting and that's trying to upset it is right.
Yeah.
Fighting costs money, and you don't know if you will win. But from a company leadership perspective, you have to fight.
Right.
And so uh, I have high hopes and expectations for Comcast to right its wrongs, right?
Mhm.
People hate exploding prices. uh, and meanwhile, you have Charter basically saying, shame on the consumer for not recognizing the great things we have, and they're leaving us. I'm like, that's not a winning strategy, right? Um,
So Roger, I know we're a little bit over, but no one is having any kind of conversation here in DC these days unless you intersperse the term AI.
Mm.
So
yes,
I know we're talking telco, broadband, et cetera, but let me introduce AI into the conversation before we sign off. And that is, you did a really, really beautiful note. It really helped me connect the dots and therefore helped me to explain to folks what is the relationship between broadband infrastructure and the pace and evolution of AI.
all right. So not only do we run these really large wireless surveys, we also have now the largest AI survey. We talk with more than 6,000 people every week on AI. We have now talked with more than 100,000 people about the topic, which is more than anybody else by an order of magnitude, basically. What is that? One of the neat things that happens when you have large sample sizes, you can go from correlation to causal inference because your control groups naturally appear in the data. And so I did the analysis on what is the causal relationship between what network people have and what AI loads they run, and vice versa. And it was, and the articles are up on Recon Analytics and on Light Reading. You can read it. It's like 3 pieces. And basically, the better the network, the higher quality uh, of workloads they run. If you're on fiber, you're doing heavy data analysis. You're doing things with pictures and um, with video. With cable, it because the video parts are falling away. When you do DSL and satellite and mobile, by the way, 20% of Americans are using AI on a daily basis on their mobile device. Massive. But they're largely using it for text-based inquiries, where it has become, right? It's no longer a search engine, but it's an answering machine, where you put in your request and it actually gives you the answers that you hopefully were looking for, right? So and then for the people, and it's, by the way, it's a flywheel and it's a virtuous circle, where if you're running higher workloads, you're going to, if you have the choice, you're going to fiber. And so fiber is like where this all is going. We'll see what impact DOCSIS 4.0 has, which has like then symmetric, and they're putting a lot of work into making fiber to make cable with DOCSIS 4.0 fiber-like. I don't think it will become fiber-like, because otherwise, why are the cable companies building fiber and not more DOCSIS? But the gap is closing. So, but yeah, it's AI and fiber are natural complements.
Well, I would recommend, if folks haven't read your pieces yet, I found them to be very instructive. Jen, I didn't mean to cut you off.
I was just going to ask, Roger, you're saying the cable companies are building fiber? Because I thought,
Yes.
yeah, they are. Okay. Okay.
Every expansion market, everywhere they do RDOF, it's all fiber.
Got it.
11, last number I saw, like for Comcast, 11% of their broadband customers are actually on fiber.
Wow. Okay.
And they are, with RDOF, they're going into markets where there was no broadband before, and they're beating up the DSL people. And within a year, they get 40% market share in these RDOF markets.
Wow.
Really, really well done. And by the way, it shows you the power, because when a fiber company comes in, they don't ramp to 40% within a year. They ramp to 20, 25. So the cable guys are really, really good in selling fiber.
Right. Roger, and Jen, I don't know if you had any last questions. I know we are over, and as you suggested, Roger, when I sent you the 12 or 13 questions, we could talk for hours. We haven't talked about network modernization. We haven't talked about USF reform, IP interconnection, spectrum auctions, et cetera, et cetera. So if you wouldn't mind, we may
I'll come back.
come back
I'll
and
come
join
back.
us.
If you want me, yeah. No.
The lunch ladies welcome you with open arms.
Yes,
Okay.
you have a standing invitation to rejoin, and there's certainly a lot to talk about. But my takeaway, Jen, here is it's, as you said, Roger, it's going to be a robust, very active year. We're going to see developments out in the rural markets with these carriers. You're going to see companies continuing to build and invest. You're going to continue to see AI scaling. And, as you confirmed, the digital infrastructure that the companies are building is a critical piece of that success story.
Absolutely.
Jen, I think we are not hosting one of these for
December.
December, just because it's the holidays. So I think for everyone, we will reconvene in January, and we'll be sending out information about our guest speaker. But Roger, thank you very, very much for joining us. I found it, as always, very, very instructive.
That
Jen,
was
Appreciate
great,
it.
Roger.
Thank you
Thank
for
you
having
so
me.
much, and happy holidays to all.
happy holidays.
Holidays.
Great to see you, Jen.
Thank you. Bye-bye.
Bye-bye.